Good evening and welcome to a brand new show of Markets Tomorrow. I'm Nikunj Dalmia. A slow start to a new week. Indian markets clearly failed to capitalize on strong global cues and on strong momentum from last week. Financials were under pressure, but oil stocks attracted a lot of attention on hopes of a durable solution to tackle oil subsidies. So how should one react or read into today's evolving trends, and what should one expect from earnings season, which is here to start later this week? All that and much more on this episode of Markets Tomorrow. And to help us dissect the big picture on this edition of Markets Tomorrow, we're joined by Adrian Lim, Senior Investment Manager at Aberdeen Asset Management, who will join us from Singapore. And to give us an understanding of the technical outlook, Deepak Moni, Director with Trend Watch India, he will join us live from Pune. Before I bring on board my live market guest, here's a look at how things shaped up for Indian markets for the day gone by. Nifty Spot has once again cracked below 6,000. Banks today were the worst hit. Banks, in fact, both private banks and PSU banks, they led the decline. Fuel retailers were up. They were in demand today. Markets are hoping that there would be some durable solution to the oil subsidy issue, and government will be able to mend that issue rather smartly. CLSA today came out with a massive upgrade on Maruti, and they are of the view that structurally Maruti could benefit if the economy picks up, and for Maruti in the current quarter, operating profit margins could expand because of weakness in yen. The top traded counter on both the exchanges was BPCL. Look at some nifty gainers now. You had BPCL along with there was some price action. That's BPCL for you, 385 rupees for BPCL. Some more nifty gainers, they will just pop up for you on your screen. You got Maruti Suzuki, which really had that CLSA impact. Cipla along with Tata Steel. Nifty losers now, L&T, HDFC and JP Associates. Across the board, I would say financial stocks were under pressure. If you check on power finance companies as well, REC and PFC, they also were under intense pressure. There you go, power financiers on your screen. PFC down by about 2%. REC took a knock of about 2.6%. But the notable trend here is that volumes were not strong. So today what we saw was purely some profit booking. Fuel retailers, that was the game in the town, or I would say that was the only game in the town. HPCL and BPCL, they all of them appreciated on strong volumes. There is an anti-dumping duty on cheap Chinese imports, and surely that helped the sentiment for JSW Steel, SAIL and Tata Steel. In terms of mid-cap gainers, India Bull Finance today was again on a tear. That stock in quick time has appreciated from levels of about 280 to current levels of 330. There is a buzz in the market that India Bull Finance soon could be looking at a reverse merger. Exide and Adani Power, two more stocks which were in demand today. Adani on your screen, 65.5, and Exide 146, up by about 3 rupees on very strong volumes. So what's the way forward for Indian markets from these levels, and what are the top ideas for 2013? To discuss that, let me now bring on board Deepak Moni and Adrian Lim. Deepak, you go first. The fact that Nifty today has closed below 6,000, in the overall scheme of things, how important is that?
Not significant at this time, because it's only a 3-day low, and that breakout from the range of about 58.25, 59.50, this could look like just a pullback to those levels after that breakout. But if this persists, then we could have a different picture emerging. Today's decline is just lasted about an hour towards the end. Until then it was quite flat, so I wouldn't yet read anything into it. I would say the uptrend should be considered still intact, unless further developments indicate that things are now turning down.
Do you think, Deepak, this market will still qualify as a buy on decline market?
Yes, it would, but if you consider the trend, the intermediate trend, it's been going on since November 20. Now that's quite a long run even for a bull market. So an intermediate downtrend at this stage will be no surprise, but it wouldn't be end of the overall move. And if you do get an intermediate downtrend now, it would provide an excellent opportunity to reinvest into the market.
Adrian, let me also encourage you to join in here. How would you characterize the current environment for Indian equities? 2012 was a good year for Indian equities, as India was the best performing market in the entire region. Do you think for 2013 the outperformance is here to stay?
Well, 2012 has been an excellent year despite the headwinds earlier this year. I think since the finance ministry was reshuffled and Chidambaram came in, we've seen a surge and recovery in interest and sentiment in the market itself. I doubt the chances of replicating that would be very strong unless we continue with the momentum of reform. The underlying companies remain strongly positioned for extracting good gains in the market, but the market as a whole will come through some headwinds and some challenges as well. So we think the chances are more muted in 2013.
What about valuations, Adrian? Some would argue that Indian markets now, after the recent run-up, they're priced to perfection.
Yeah, actually, the high valuations are a cause for concern and give pause to what you actually put your money in India. That's why we think picking stock is very important, and you do need to be very selective about what you're exposed to.
Adrian, as a house, Ibidin is always a buyer in good quality stocks. You never buy companies which are trading at stretch valuations. You believe in buying the power of companies which have ability to generate cash flows. So for 2013, what are your big ideas? What are your big bets?
It would be very similar to what we have been attracted to Indian market. Domestic consumption of products and services are the most attractive parts of the Indian market to us. We like companies that manage, invest, develop their brands on strong product quality or service quality, and we think that the domestic market would continue to drive growth over the longer term in spite of what macro headwinds might come.
Deepak, what are your thoughts on first the oil and gas sector, and within the oil and gas sector, Cain and then Reliance Industries?
Well, the oil and gas sector, at least if you take BPCL, that's been a very good performer for many years. HPCL, IOC have lagged behind. If you look at a Cain India, that's a laggard because it's only now about barely 10% above the one-year low that it has had, whereas many stocks are now making lifetime highs and at least one-year highs. So this is a clear laggard. Reliance has also been a relative laggard, though now it is creeping into a one-year high. It took a little while to get there. So it's quite a mixed bag in the entire sector. And if you had to pick a stock, it would be probably BPCL.
Well, CLSA today came out with a big upgrade on Cain. And the thinking behind that upgrade was that there are a couple of policy measures which Government of India has announced. Those policy measures will only boost Cain India's production, and CLS is also making a case that Cain India has been a massive underperformer. The stock has not participated, and at the current level, which is at 340 rupees, Cain India is trading at a replacement cost of something like $80 per barrel, $80 per barrel in terms of Brent, not NYMEX. They're also making a case that in last 1 year, since Cain India has not performed or has not participated, it could catch up in the first half of this year. The other one which saw some institutional action today was Maruti, where just about everyone on the street is now of the view that for Maruti, the HR problems are over and the storm has come and gone. Deepak, Maruti, it's been a dream run for Maruti of late. In quick time, that stock has appreciated from levels of 1300 to about 1600 now.
It's been the safest auto stock for many years. It got slightly wounded with the strike. It went through a bit of a downturn, which was unusual for the stock, but it seems to have shaken that off and gotten back to the way it used to be, say, 2 years, 3 years ago. Wherein what you get in this stock basically are pretty decent uptrends and very shallow declines. Now, you do get very sharp moves up in the other auto stocks, especially Tata Motors, but they can give back a lot of the gain it makes. This is what makes Maruti a little unique, and I think it's pretty much back to that sort of standard again.
On markets tomorrow, it's all about important cues for tomorrow. So what exactly you should monitor and what exactly could influence your portfolio. Number one, it's all about regional performance and regional linkage. Today, Indian markets, they clearly failed to capitalize on strong global cues, and India, for a change, was one of the worst performing regional market. Follow-up buying in OMCs, that seems to be the only game in the town. Market men are convinced that in the run-up to the budget, Government of India will be able to come out with a durable solution to mend the subsidy problem. The dollar index is now up 4 days in the trot now. That's quite unusual. At a time generally when global markets are in a strong risk-on frame of mind, global volatility has virtually collapsed. There is clear visibility for next 2 or 3 weeks. There is strength in the dollar index, and historically we've seen that more than anything else, it is often the currency market which tends to be the lead indicator of what's coming next. So do monitor the dollar index with a magnifying glass. Yes, right now there is a lot of liquidity, but if the dollar index once again goes above 81, that in a sense in the near term could really shake the apple cart. Marico, the management today has gone on record and they've indicated that they plan to restructure the company and they plan to hive off and list Kaya. Kaya is Marico's skincare unit, which honestly has been a big drag on Marico's balance sheet. Deepak, Marico, 227, do you think that stock is looking good for another 10-15% from these levels?
Well, Marico has been a pretty solid sort of stock. It's again one of those stocks that does not fall and goes up steadily, not spectacularly. So at the end of the year, you get very good returns on it. Nothing that has changed in the stock to suggest that. If you look at the overall one-year performance, the stock hasn't doubled like many have, but it's not really very far from that either. So given that, I would say that this is a very good portfolio stock where you're not too much worried about drawdowns.
What do you make of today's selling and unwinding in L&T, Deepak? Now L&T of late has been a marked outperformer, but today the stock just caved in.
It's not, it's done pretty well, but if you look at where the stock is now, even before today's fall, it had peaked in October. After that, it's not even been able to catch up with the October high, so it had started faltering. So if there is an intermediate downtrend coming, I would think that this is a candidate for one of the stocks that could lead the way.
Adrian, as a house, Aberdeen is extremely bullish on private banks, and within the private banking space, your preferred bets are ICICI Bank, HDFC Bank, and then again you have a large exposure to HDFC Limited. What are your thoughts on private banks and HDFC going forward?
We have HDFC Bank, and we have ICICI Bank. We're confident because they are very focused on servicing their customers and expanding their products and services range. Even if there is an extended slowdown, we think that these financial institutions have a very strong position within the market, and it might wobble a little bit, but over the medium term, we think that these banks are very well positioned for growth.
In a falling market, when just about everyone on the street is convinced that Infosys this time will come out and slash their FY13 guidance with their Q3 numbers, Infosys was strong. Let's look at Infosys intraday graph on your screen. Markets, they started strong and they corrected. Infosys pretty much went the opposite way, which means it started weak and then closed almost at the highest point of the day. Adrian, what are your thoughts on Infosys? Just about everyone on the street is convinced that Infosys will slash their guidance.
It's difficult to say and predict. Well, you might have information on guidance that's not available, but it's difficult to predict exactly what the guidance would be going forward. Infosys has had a series of downgrades, and it is a company still in transition. If you look over the last 10 years, it's done a very good job. But with all successful companies in competitive areas, the last 2 years, 3 years have been a challenge. We like TCS as well, and we have very chunky exposure to both Infosys and TCS, and we think that these two companies provide good balance to the portfolio.
Well, gentlemen, stay with us. So let's take a break, but we are leaving you with some MFN strategies for tomorrow morning from C.K. Narayan and Shadul Kulkarni.
I'm inclined to go long in Pantaloon Retail at the current price of about 265 to 66 on the futures. I think the share is on the verge of continuing its ongoing uptrend and should probably haul itself up to about 280, which is my immediate target on this. Maintain a stop loss at about 260 or slightly beneath that. Second buy I have is perhaps not at the current price level, but on a small dip. This is on Biocon. It's currently flared up to about 303, but on a slight intraday pullback to about 300 rupees, I would suggest buying with a stop loss at about 295, 296, looking for an immediate target around 315 in the next 2 to 3 sessions.
Yes, the first stock that we would recommend is Ranbaxy. In case of Ranbaxy, we are seeing that 3 sessions back, the stock has actually given a breakout. Over the past 2 trading sessions, you've got a decent pullback, and you're getting a very good stop loss as well as potential target. So I think that for a target of around 535, 540, you can trade long in case of Ranbaxy January futures, buying the range of around 518 to 520. The stop loss on the lower side is 514.85. So I think that this would be one of the trade ideas. And the second one would be the defensive but the large cap major ITC. I would look at buying ITC but above the levels of 287. Once the stock crosses 287, I think that you can get a good upside in case of this counter. Probably today, if not today, then in tomorrow's trading session. If it crosses 287, you should be going long. 282 on the lower side would be the stop loss. I think 304, 305 is quite possible. It's a little longer term call, but I think that for the January series, it should bode well for traders.
Now for some stock ideas for tomorrow morning, and for that today let's start with Pranay.
Hi, well the first stock to watch out for is NMDC. The international iron ore prices are ruling at 8-month high and are showing a general broad strength. Also that most of the price rise in iron ore is fueled by Chinese strong economic rebound. It is currently consulting KPMG in its pricing formula of average monthly iron ore prices, and this formula is likely to be announced very soon. Also, as a result of this formula, it will be shifting from market-driven mechanism versus the export parity, and this will give it a higher pricing power. The domestic iron ore output is also likely to fall due to the imposed mining caps in Karnataka, Orissa and Goa, but the forecasted demand is expected to rise by about 8% over FY12 to FY14, and this will shift the pricing dynamics in favor of the miners with the changing mining landscape. So due to the debt-free nature of the company, having high cash of about $4 billion on the books, also that it produces the best quality iron ore, about 66% Fe grade, has the lowest cost of production, so has high EBITDA margins of about 75%, and that it has the pricing power, is a perfect blend for the company. It is also currently very attractively valued at FY14 enterprise value to EBITDA of about 4x versus the average peers of 6.8x. The next stock is Tata Chemicals, where its initiative of backward integration will enable low price availability of the raw material cost. Also with the improved Rabi crop outlook, the demand for the fertilizer inputs is likely to go up. Also that it is diversifying and strengthening its foothold into the branded pulses market, which is now expected to grow by over 100% every year from this year onwards. And this will enable it to get a double-digit FMCG multiple versus a single-digit low fertilizer and chemical multiple.
That's a punchline. That change really could be the big operative word for Tata Chemicals. Pankaj Pandey, good evening to you. Welcome to the show. Since this is our first interaction for 2013, straight off, let's talk stocks. What are top ideas for 2013?
So in terms of top stocks for 2013, we are bullish on stocks like TCS with a target price of 1450, Tata Motors 360 target price, Cadila Healthcare, we like Z Entertainment. On the mid-cap side, we like Info Edge, Heidelberg Cement, then Balkrishna Industries, and a couple of other stocks like Kansai Nerolac and Page Industries.
Deepak Muni, what are your top ideas for tomorrow morning?
So tomorrow morning, the first stock is actually the same one you were discussing a minute back, Tata Chemicals, with a stop loss of 366, target of 386. This stock has acquired recent momentum. It's about a 10% move in 3 weeks, which is not spectacular, but for this stock it's pretty decent. And it did finish reasonably close to the high. A lot of stocks just tanked towards the end, so that's the reason for picking this. There is a short sale too, which is a day trade. Tata Chemicals is more of a short-term buy, good for 2-3 days. Tata Power is a day trade short sale to be squared off tomorrow itself. This comes with a stop loss of 111 and a target of 107.
Adrian, You have an interesting position and you have a large exposure to Hero MotoCorp. At a time when the dynamics of the entire two-wheeler industry are changing, what makes you still bullish on Hero MotoCorp?
Well, it's easier to sell two-wheelers than four-wheelers. A greater portion of the population can afford a motorbike than compared to the portion of population that can afford a car, even if it's a small car. And Hero has been selling bicycles and then now motorbikes for 2-3 generations now. We like what they do. We're close to the company, and we've seen the progression from partnership with Honda to coming out on their own, rebranding, and then now delivering purely Hero branded products to the customers. So we think that the penetration levels remain something that can drive long-term growth, and we think that Hero is well positioned to take advantage of that trend.
All right, Pankaj Pandey, Pranay, Deepak Moni, Adrian, gentlemen, thank you so very much for joining us on this edition of Markets Tomorrow. That's it on the show. I'm Nikunj Dalmia signing off. Have a great evening.